Hello everyone and welcome to my channel. Today we're going to dive into a topic that gets a lot of attention, reverse mortgages. First, I'd like to share with you a story about a client that we've recently put into a reverse mortgage, and likely there's going to be some things about her story that resonate with you. So stay tuned. Maryam was referred to me by a former colleague that I used to work with, and he works at a credit union, and many credit unions do not originate reverse mortgages, so he thought of me when referring Maryam over. And Maryam is a joy. She is 79 years old and sharp as a tack, mentally and physically, and extremely capable. One of Maryam's greatest joys is actually gardening in her property. She is a retired professor, and prior to coming to me, she'd done a lot of research on reverse mortgages and had determined for herself that it was the right fit for her. When I asked Maryam why she thought a reverse mortgage was right for her, she shared with me her story. Several years back, her husband was diagnosed with cancer, and they actually spent a lot of their liquid assets while he was in treatment. Unfortunately, he passed away, but one of the byproducts was they had depleted most, if not all, their savings. Maryam's income consisted of Social Security and really an inadequate pension. And she had her mortgage, her first mortgage, which is a little under $200,000. She also had racked up about $30,000 in credit card debt. Additionally, she had deferred some dental work that she needed to have done, as well as some deferred maintenance on her property. Her home was worth about $1.4 million at the time we did the application. Maryam loves her home. As she called it, it is her sanctuary. And I had an opportunity to go out to the property on a couple occasions while we were doing her mortgage. And it is a beautiful, lush property. It's kind of on the side of a hill, has several levels to it. And she gardens on one of those levels. And as she refers to it again, as her sanctuary. And I could see why that was. So she thought a reverse mortgage was in her best interest because she was falling farther and farther behind in debt. I ran the numbers for Maryam on a FHA-backed HECM, which is a reverse mortgage. It's the most popular and common one, and determined that we could not only pay off her first mortgage, which saved her $1,200 a month on the mortgage, we could also pay off the $30,000 in credit card debt, give her $20,000 that she desired for her dental work and some of the work on the property. In addition to that, she would have access to a line of credit of $300,000 over the coming years to supplement her income. This was a life-changing event for Maryam, and I was really honored to be a part of it. Isn't that a wonderful story? But I also want to convey this, that a reverse mortgage is more than just a desperate need situation. It actually is a wonderful financial tool that can be used when done correctly. For example, if one has, say, a certain amount of funds in retirement accounts, 401ks, IRAs, or even a brokerage account, what you can do instead of tapping into those when there is a down market. So let's think about this in a 20 to 30 year span. There could easily be 2 to 3 downward market resets or crashes of 20% or more. If you're looking at using those funds during that downward trend, you're really decreasing the value of those assets exponentially. So one of the ways you can use a reverse mortgage is maybe not use it all the time, but when those downward trends happen, you actually tap into your reverse mortgage as opposed to tapping into your liquid assets. Allow the liquid assets to go down, recover, and come back. And actually, you would be in a much better financial position using that as a financial tool. In 1999, there was many of us might remember the dot-com crash. And shortly thereafter, I had actually received a call from a gentleman, and he was looking to do a cash out refinance. And we got to talking, and he was pretty upset. He shared with me where he had recently retired, and he had $750,000 as his nest egg in retirement account in the market. And unfortunately, during that crash, it had dropped below 300,000, and he was beside himself, understandably so. His nest egg had more than lost 50%. He'd instructed his the brokerage firm to actually exit out of all the securities he was in, and he went into a cash position. Now, looking back, had he maybe kept his money in the marketplace and had the ability to draw off of a reverse mortgage while the recovery was happening, he would have been in a much better financial position. It would have given him a chance to have those assets recover. He would have drawn on the reverse mortgage, and it would have been really a better financial way to go. First and foremost, a reverse mortgage gives retirees the ability to access the equity in their home without having to sell or move out. This can be a game changer to allow you to supplement your retirement income or cover unexpected expenses. But that's not all. A reverse mortgage gives you flexibility where you can receive funds in the way you desire. It could be a lump sum payment, it could be monthly distribution, or tap into that equity as you need. And here's something else. A reverse mortgage is a non-recourse loan. What does that mean? It means that the only collateral that is associated with the reverse mortgage is your property. So let's say hypothetically, as the years go on and the mortgage balance exceeds the value of the home, and you or your heirs have to exit that property or sell that property, the property is the only thing that can cover that mortgage. So if there was a deficiency at that time, your heirs would not have to worry about that debt. The balance would be taken care of by the insurance that is associated with a reverse mortgage. Keep in mind, the only collateral associated with the mortgage is the home. So they can never go after any other assets. And the only thing that would trigger the home needing to be taken care of is something called a maturity event, which means either the last borrowing spouse passes away, or permanently moves out, or sells the home. Those are the only triggers for a maturity event when the property would have to transfer hands. Now, one last way would be if you got behind on your property taxes, insurance, or any significant deferred maintenance. So as a homeowner, just like you do now, you have to keep up on your property taxes, insurance. Any lender, if you got behind on that, would have a conversation, and in likelihood, they could take steps of taking back that property. So no different than any other mortgage. Like any financial instrument, a reverse mortgage is not for everyone. It's important that you weigh out the pros and cons and really get some good, solid financial advice to see if this is in your best interest. And if you have any questions, I'd be happy to answer those for you. You can actually even have a performer run for yourself, where simply if you just provide your zip code, your mortgage balance if you have one, your date of birth, and the value of your property, we can run a performer that gives you a sense of what is possible. And if you have any questions, feel free to reach out. My team and I are licensed in 40 states. We would love to help out and answer questions for you. And if you found this information valuable, if you'll please like, share, if you have anybody that you know that could use this information, and subscribe for any other future home buying financial tips. Thank you, and I hope you're having a great day.